Okay, guys, very quickly going to jump into the weekly forecast because unfortunately, I didn't manage to upload a video last week, even though I did put up the snapshots from my forecast for yourselves on social media. I've done my review, so as per normal, we'll go from the monthly down just so that we get a bit of a top-down analysis so we can see exactly what's happened over the past few weeks and months and see where price is sitting on the higher time frame down to the lower time frame. Then we can discuss exactly what's going to be happening in the recent period that we're looking at now. So as we have been discussing a little while, obviously we knew we made COVID lows. The COVID lows had a massive monthly spike. That monthly spike was tested a couple of months ago. As we can see at this level here, it was not taken in June. However, July then came, wicked down, took the 50% of the monthly, which is obviously inefficient price action, left behind some demand here in the lower time frame. It has actually just literally kissed the top of that demand and rejected off that point. So we've got an indecision candle being formed on this current month. We'll have to see what it does because the market has effectively broken above the highs of this candle, but then has rejected back down. It's left liquidity above us. We're going to jump down onto the weekly and see exactly what price has done on that basis. So when we get onto the weekly, we can see where that equal high has been left behind. There's liquidity at this point where we've got equal highs on the wicks. The market has been held back on supply that was formed here, which then obviously broke lower. And we are now obviously looking to see exactly what kind of happens. A big weekly rejection this past week. Obviously, price looked like it was trying to attack the highs that were currently here. It obviously respected the wick that was formed here. Supply has been formed on the way down, and it seems as though now we're going to be rejecting down into next week to then test the demand levels that we have below us. So at the moment, bias does look like on the higher time frame to be possibly testing the wick that was left behind. So buys up into the week and then sells down to target demand below. When we go into the daily, we can more clearly see the levels of liquidity that we had marked up. So obviously equal highs across here with the imbalance. There's supply being marked up on the higher time frames and lower time frames. Areas of interest here. Why do we mark these? We've been through this before in terms of how to mark up supply and demand. So we're looking for areas that have basically formed volume, put volume into the market and taken lows that were held previously. So we can see here, lows were held, demand were kind of holding it up at this point. However, the supply that was introduced here with volume then broke that level. The support that was being left behind here was taken, and therefore there's definitely an area of interest for us here. Market broke lows, came back, retested, and obviously was held up here. So price was held down effectively by sellers, and therefore sell orders were holding price at this point, which continued to be respected. Took lows again, tapped into demand on the lower time frame, and has rejected out of that, but has again failed to break highs that were originally kept low for us over these past few weeks. So again, a nice area of liquidity above us. We've got equal highs left behind here. There's inefficient wick that was actually left behind as well, which wasn't tested to 50%. So right now we're seeing the market trying to attack this level, but it's not able to do so at the moment, even after the push from this week with news and everything causing a massive spike, I believe level 150 odd pips. It was still unable to break supply. So it seems as though we're on a downward trend now. The market may well be looking to kind of reject down, target demand below us, and then use that volume to then break up and get through these levels. Go down onto the 4 hour. We'll see exactly what we're playing with. So again, we can see the wicks that we've now marked up on the 4 hour, which haven't been tested by this wick. Equal highs left behind. Market came back, rejected, took lows here, equal lows, liquidity grab, buys up for the week. The buys did not then take the equal highs, surprisingly, in spite of the volume that came in, rejection from that point and continued to sell. So some really good moves during the week, which could have been capitalized upon, but unfortunately were not due to very, very strange absorption, orders going in, huge clusters being formed on the order book, and not really giving the confidence of a correct setup. So we didn't really see true liquidity grabs occurring. This occurred tail end of last week, and then Monday didn't actually give us equal lows with liquidation to then take the highs. So just literally moved out of an undetermined zone in the middle. So not an ideal setup for us at TVT, but it did then come, test supply and rejected out of supply and then continued to sell down to obviously cover the inefficient price action, the imbalance that was left behind on the news, which is quite characteristic of GU. Okay, so let's go down onto the 1 hour. Very much a similar type of scenario. We're just looking at things in a bit more refined principle. So we can see where demand was left behind here, where the price was held up, took lows at the bottom here. Liquidity grab was formed on this wick, bang, hit demand, which kind of moved the price higher at this point. Those lows were not taken, which was surprising to us. Again, it was repeated this week again. So lows were not taken to tap into demand to then buy up out of it. So again, we've got levels of demand here. The supply was then obviously tested, respected, but because we had equal highs so close, we can see the highs all the way across this point here. It was very surprising that the buyers did not then target that, hit supply and then come down. So we can see from the top of the wick at this point, literally the equal highs were within 18 pips. So again, not really an ideal trade for us to get down in on the sell, but it did happen. There was a confirmation of that. So we can kind of take this, drop our 50%, and we can see that the market respected the 50% and then rejected down and continued to sell into Thursday, Friday. Right, so what we will now do is turn on the magic. It will get a bit crazy, but then we'll kind of break it down. Okay, right, now let's zoom in on this so we can see exactly what we're looking at. This is a whole bunch of key levels and areas of interest that we're looking at on multiple time frames. So we've got market profile here on the weekly, market profile here on the daily, imbalances on the 1 hour, imbalances on the 30-minute, and imbalances on the 15-minute. And then we've got areas of interest such as the weekly POC, the daily POC, and high volume spikes as well. Now I've started looking at Bookmap as well. Not really an ideal tool, to be honest with you, to kind of give you a confirmation of a trade, but it can show you where pending orders are sitting in the market, and then is an indication as to whether a certain level that matches up with our key levels will then hold. So let's drop down onto the 15-minute and then we'll zoom in on the chart and see what we can kind of get out of this. Okay, so the market kind of reacted. CPI news, bang, bought up massively. Did not target the lows as we said before it created this massive move. Excuse me. So equal lows were left behind. We're not tapped, we're not targeted. And then the market bought out. So there was a key volume, high volume spike as well that we were looking to get targeted at that point. It held price up before actually tapping that. And it was very, very close, I believe, from recollection, in about 7 pips of price. Within 7 pips, we were, so 3 pips there. So when we were looking at the trade materialize, when the market was coming back down, at this point, we were literally only 7-8 pips away from our area of interest. So we wanted the market to spike down into that zone, take all the lows that were sitting down here, hit the key level, take demand, and then move higher. So again, didn't happen. Yes, a strong key level was sitting below us, price was held up above that point, and the market just moved away from the zone. So demand was then left behind when we had the news release. So obviously CPI came out, market moved massively up. As I said, we can actually measure that. I think it was 150 pips from what I remember. So yeah, 135, and then to the top there we've got 150. Okay, so a massive push up, but then the market rejected out of that zone, came and tapped into an area of interest up here. There was a bearish imbalance, and then sold down, continued to respect and sold down. So we've got demand marked here, 31.0 bullish imbalance has been tapped. Tail end of the week, the market rejected off that. There is another key level at that point as well, so I've left that on the market, on the chart at the moment as a markup. When we get down into price currently, so we can see the market rejected down Friday, beautiful sells from the top, huge orders going in, 99 bullish imbalance on the higher time frame. I believe that is on the 30-minute, 61.0 lower down, and then 29.0. So some of these were bullish imbalances, but clearly bullish imbalances which are being triggered as sell limit orders, triggered at the top of the wick and then sold down. So we have supply, key levels above us, and then continuation of the move again, volume went into the market, 19.0 bearish imbalance, continuing to push price down. Price hit demand, took that 31.0 bullish imbalance, rejected out of it, but then obviously I stopped at this inefficient wick here. So we can see when we mark that up. So at this point, this wick has now been tapped 50% and the market rejected out of that. So the next key level above us is obviously going to be this wick here. We can mark that to 50% and see whether the market comes and taps it. The good thing is there's an imbalance pool above that on the market profile. So we've got low volume orders in with no real registration of spikes on the market profile. So a good area to magnetize and target the market when it moves up, to then see if it kind of respects the imbalance pool or uses it as manipulation to then tap up into the imbalance above or the supply above that to then sell down again. We've got weekly POC and daily POC from this week and yesterday sitting at pretty much the same level. There's a high volume spike below that and there's an imbalance pool below that, which matches up with the demand that we have below that respected the bullish imbalance from before. So at the moment, it seems as though if we were to try and paint a picture in our mind, we've got a key level above us. That market has been held below quite a bit in the tail end of Friday, but that could just be manipulation. So in Asia, we could probably see the market come down, tap into demand, tap into the weekly POC, move up into the imbalance, and then supply and then reject back down. Our bias at the moment is for the following week, possibly to continue sales because we have a huge number of sell orders coming in here, which are going to hold price down. But it'll be good to see whether the market reacts off an early zone or a higher zone. When we kind of, not that we use this, but let's just basically do an analysis on where the full fib is. So we can turn on the full fib. And yeah, we've got discount everything above the areas that we've marked. So the imbalance pool, the bearish imbalance, the supply, and the key level on the market profile, and the levels above that are all within discount zones. So it is a good looking trajectory to target the zones that we've got marked up. Again, we will see what happens as the market gets into those zones and then wait for a reaction from there. Okay, so we're looking to buy up to sell down and possibly break the lows that were created or held in this week after the news, and then target liquidity below, which we were hoping was going to get targeted in the week. So it looks like we're going to be buying up early week to sell down, hopefully. But again, we don't predict, we react. We just basically paint the picture so we have a game plan as to what we should be doing. Okay, hope that makes sense. As with everything, like, comment, subscribe, share with those who you think it will help. TBT is still open, 2.0 is still going on. The Discord mentorship is still working very well. We have another webinar planned for next week, so we're going to go through a few bits with the members there. And the guys are actually doing quite well, smashing it in terms of understanding volume, in understanding market structure, and interpreting things the way that we would like to see the charts. Again, as with everything, patience is key. Do not trade until you see the zone. Do not trade blind, and use the tools that we have been given institutionally to see exactly whether the confirmations and picture that we're painting in our mind actually holds up in terms of order flow. And once you see that, then it's a case of waiting for the reaction, confirmation, and then entering the trade with the risk that you are comfortable with. Doesn't necessarily have to be 3 pips, it can be 5 pips, it can be 10 pips, it can be 0.5%, it can be 0.2, it can be 0.25, whatever you are happy with to determine what your trading plan should be. Play with that, get comfortable with that, and only then, once you've seen consistency in your execution and your emotional attachment to your trading plan, should you then think about either going for a challenge or going live or live trading funds. But you need to prove to yourself that in theory, i.e. demo, you are doing what you have planned to do as a professional trader. And there's no such thing as a professional trader who just becomes professional and then packs up. It's a constant learning process, it's a constant adaptation. This week was a very good lesson because the market was not normal, in inverted commas, but there were still setups and trades that could have been had if you had the hindsight and the insight rather to be able to read things like order flow, the footprint chart, and seeing the orders going in and certain levels being respected. You know, thankfully we have a lot of institutional tools that we have access to within TVT, and it kind of removes a lot of the unknowns and a lot of the vagueness that other people would be looking at in terms of assessing just candlestick charts, wicks, and the like. You know, we actually have really good in-depth tools that, you know, paint a clear picture for us about the zones that we're watching and what the areas are being targeted, being attacked, the volume is going in, or whether there's pending orders being placed in by institutions to kind of hold a level or break a level. Okay, take care, enjoy the weekend, enjoy the weather, and we'll be back on Tuesday. Bye.